topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Experts show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Tampa. Welcome to another Ask the Expert show where we bring you Tampa, St. Petersburg, that entire area. We bring you the top experts in the fields of legal, health, financial, and home improvement. Today's show is brought to you by the law firm of Kemp, Rouge, and Green. They're injury attorney laws. They handle auto accidents, slip and falls, dog bites. And when we say auto accidents, it also is boating accidents, truck accidents, and motorcycle accidents. They can be reached at 727-835-8327. That's 727-835-8327. Hey, today's show, I love doing today's show because it affects so many people. It is, even if you don't have a lot of money, this can affect you in so many different ways. And I just want to say this. This is the area, this area right here is one of the toughest areas for a show to find someone who is really, really good and mainly can be trusted. And we were so lucky to find Ray Ferrara because he is, you're going to see he's so easy. You can understand what he's saying. And we're here to educate you. This is not an info commercial. So we were really blessed to get Ray as our expert, whether you want to call it wealth management, whether you want to call it financial advising. But the name of the company is Provise. And we've got Ray with us right now. Good morning, Ray Ferrara.
Good morning, Steve, and nice to be with you.
Always good to be with you. You know, I was just telling the viewers and listeners that it's so important when it comes time to helping someone handle their money and make it so that they can understand everything you're saying, because it can really get complex. And we have found with your show and emails that we've gotten that people love the way you explain when it comes to wealth management, financial advising. And I just want to thank you for that, because it is an art. It is an art that how you communicate with people. So we are getting so many new people every day because we're getting their letters. So let's tell people again about you and your firm.
Well, Steve, Provise Management is a financial planning firm with offices in Clearwater and in Tampa. We've been around since 1986. We're working with about 1,200 families scattered over 34 states and managing about $1.6 billion on behalf of our clients. But our clients range from those that have only a few dollars and they're starting to accumulate money, up to those that have much more money than most. And so we have a very open platform to work with people, because whatever people have is what they have, and that's what's important to them. So it's important to us.
Oh, I love the way you explain that. How is it different now, Ray, the way you work with your clients now, say, versus 5 years ago when the economy was different? I'll just say different.
Well, Steve, it's different every day in many respects because it's a very dynamic time in which we find ourselves. Today, unlike 5 years ago, pre-pandemic and pre-inflation, people were thinking that from an investment point of view, that the stock market was going to do nothing but go up, which it pretty much did for the 10 years coming out of the Great Recession in 2008, 2009. Today, the market's down over the last 15 months from its all-time high. And of course, we're seeing inflation in a major way for the first time since the late 70s, early 80s, which unfortunately, or maybe I should say fortunately, I was able to weather through back in those days. And so people are concerned with investments down, things costing more, starting to think a little bit more about the planning aspect of things, not just about investing money. And as you know, we stress financial planning. A lot of people call themselves financial planners. But what they really want to do is just gather assets. They really don't want to do the plan. And just like this show, if you and I don't plan for it in advance, it might be successful. But the fact of the matter is, with a plan, we're going to have more success than we are not.
Ray, it's funny because we get all the emails. And by the way, I just wanted to count it. I got curious. We got 47 emails and texts that all ask the same thing. And it looks like people are really concerned about their banks. And with all these banking issues, people are nervous. Is their money safe?
No question that there is issues to be concerned about. The fact of the matter is the problems that were faced by Silicon Valley Bank is they had a heavy concentration of depositors with money significantly over the FDIC, Federal Deposit Insurance Corporation, limit of $250,000. And as interest rates were going up, the underlying bonds that they had bought as an investment were going down, and then people started to withdraw their money, and they didn't have enough liquidity, which is what caused the issue there. For most banks, can't say all banks, but for most banks, they are not they do not have lots of accounts over the $250,000. So anybody who is under the $250,000, you shouldn't be worried about it at all, because even if the bank were to have the same fate befall them that happened to Silicon Valley Bank, the money's going to be safe, it's going to be secure, and everything is going to be just fine. On the other hand, if you are over $250,000, and I'm going to speak primarily about individual accounts, not corporate accounts, then you might want to consider either opening up another account at another bank. You may want to have a different registration at the bank where you are now. For instance, if you have it as Mr. and Mrs., you could open up another one in just your own name or your spouse's name, and that account would be covered as well. But we are going to see some continued volatility in the banking industry. We saw this morning that some of the banks that reported did not do as well as anticipated and got hurt. However, last week we saw some of the big banks do extremely well. So again, the key is keep it under the $250,000 level in each registration. You should be plenty safe. If you're over that, consider moving it to a government money market fund where you should be getting something around 4.5% interest, and the money will be just as safe as if it's in the bank.
It's funny you said that, because we've got 3 people who just wrote, what do you do if you're over that amount? And you just answered that for them.
Well, indeed, there's other things you can do. Buy government treasury bills. If you buy a 6-month treasury bill right now, at least as of last Friday, you were earning 4.7% interest, which is pretty good for the next 6 months, and kind of wait till things settle down before you look to do something more permanent with the money.
Hey, Ray, do you think the inflation numbers are looking a little bit better now with the consumer price index I think it's up over 5%. And so does that mean that we're out of the woods when it comes to inflation?
I don't think we're out of the woods, but clearly we are well off of the peak that occurred about a year ago. And as a result of that, we've been in a slow decline of year over year in inflation. The Federal Reserve says it would like to get it down to a 2% inflation rate as opposed to 5% from the high that we had at about 8% this time last year. And that may be overly ambitious in the shorter run. I think I'd be comfortable with a 3% rate of inflation right now, and if we could get to that, it would allow us to get some legs underneath of us. We are going to see most likely maybe a small blip in inflation that will occur in the month of April because of oil prices having gone up since the 1st of April as a result of the cutback of 500,000 barrels of oil a day out of Saudi Arabia and some of the other countries that were part of the pact between Saudis and the Russians. But the flip side of that is we could also see the consumer spending will be lower for a variety of reasons in the coming months, which should also help to dampen inflation as people are not going out and buying lots of goods and services.
We just got a text from Walden. He wants to know, Ray, that with all these new expenditures, he said, I don't believe you could take all the wealthy people in the United States and tax them even more and pay for all these new expenditures. Do you agree with that?
Well, I'm going to try to tread softly with politics because we have clients that are supportive of the current administration, and we have clients that are not. And the reality of in politics, Steve, is that if each side could find a way to look for the common ground that they have, as opposed to the uncommon ground that they hold, and find that little area that overlaps, we could get a lot more done out of Washington than we are right now. So to us, I would say to you that the fact is we can't continue to spend at the level that we have been and borrow money to do it. It simply doesn't make sense. I mean, if you think about it in terms of our own households, you can only spend so much and you can only borrow so much. But when you have a printing press, ink, and paper, you can just keep borrowing forever and ever and ever until you can't, and eventually you get to a bad place. On the other hand, certainly the last 2 of the last 3 years, we spent a whole lot more as a result of the pandemic, but it's time to dial some of that back down. We can't keep going on forever. But we have to remember what a gracious country we are. We do have to take care of those that are less fortunate than us, but you can't take care of everybody, and
Right.
that's where we have to find the compromise that works. And unfortunately, in the current environment, I'm not optimistic that they're going to find much compromise until the very last minute, which is going to be a great concern relative to the debt ceiling debate that is currently going on, and the fact that the Speaker of the House this morning spoke to Wall Street about. So keep our fingers crossed, but it's got to be a combination of increasing revenue and decreasing spending to get us back to a balanced budget.
No matter which party you're in, you're absolutely right. I think, what most people are concerned with, Ray, is we are spending a lot of money in Ukraine, a lot of money. But there's so many local ways to help people, just, our servicemen who are finding that are homeless, that there's so many things just here in our country that we should be putting our monies into. But you know what? I'm going to let them argue that out in Washington, because they don't really seem to listen to us at all. The president has proposed a whole bunch of new taxes, Ray, one of which is to eliminate capital gains break. What is the sense of taking the risk to invest money if there isn't a tax incentive to do so?
So, bingo, Steve, I would say to you, you hit the nail right on the head and drove it into the board. If there is no opportunity to reward people for taking risks, this great country with our free enterprise will, in my mind, stumble badly. I'm sure that the president put that large number out there as a point and a place to negotiate with the Republicans. I think it was also to satisfy his the many of the people in his party. But I think, as much as we need some additional revenue, getting at the heart of America with entrepreneurs who are out there investing their capital, causing jobs to be created, continuing to help people, whether it's anywhere from a laundry to a financial advisor to a lawyer to any of the many, many millions of small businesses that are out there, and to not reward them for the risks that they're taking on a daily basis to be in business, just somehow doesn't seem to be fair. Other parts of his plan bring up some interesting ideas and things for us to consider. It's projected now that Medicare will run out of money by 2031, and Social Security and by 2035. Some argue 2034, Social Security will run out of money. These are real problems that need to be addressed and need to be fixed. And it takes serious negotiation and compromise to make it happen. And Steve, it's way above my pay grade, probably above yours as well. That's why we elect people to go to Washington to represent us.
Ray, it just seems like that something really creative could be brought up, and I don't know. It just seems like we have so many intelligent people in the world that we could come up with something that would make it easier for everybody, as well as, and we would still get these tax dollars, because it does take money to run a country, that's for sure.
No question.
But it seems like they're always trying to make it so difficult. It just seems like, and I'll bet you have ways that could make it a lot easier.
Well, easier is in the eye of the beholder.
Yes.
from a standpoint of, who do you tax? The fact of the matter is that when we talk about the rich paying their fair share, nobody can define what that fair share is, or
Yes.
maybe we could say everybody has a definition for it. It's just not the same amount of money. Many people say, well, the rich used to be taxed at 90%, and they did back in the 70s. But they had so many tax breaks that were available to them that effectively they were not being taxed anywhere near the 90% level. Conversely, I have always suggested that any family that was below whatever the poverty line is shouldn't be expected to pay any taxes. Particularly if they're working. If you're sitting home, and unable to get a job for physical reasons, et cetera, that's one thing. But if your choice is to simply stay home, that's an entirely different one. We all have to do our fair share, and that includes going to work every day and paying taxes. Not just letting others take care of us in the meantime. But for those that are truly needy, no need for them to be paying taxes. But it would be nice if everybody was going to work, as many of them are. We just need to have more people being employed. I mean, right now we got something around $8.5 million job openings, with almost that number of people looking for jobs. More jobs, more income, more taxes. Somehow that seems to help solve the problem.
Well, we like on the show bringing good news, but I have to ask you, do you see ordinary income taxes going up, Ray?
Well, first of all, we can't continue to finance forever at the levels that we have, particularly over the last couple of years.
Agree.
So the only way you solve the problem is cut expenses, which is what the Republicans are talking about, or raise revenue, which is what the Democrats are talking about, or some combination of the two. And at the end of the day, I think that we should be looking to doing both. I feel very fortunate in my life to have gotten to where I have on a financial basis. I, like everybody, it's right here at tax day. You scratch your head and you say, geez, that's a lot of money.
Yeah.
It is. But, I've been blessed, and I don't mind paying that fair share. And I think most people understand that. But clearly, you don't want to pay any more than you have to, or you don't want to see the money wasted on programs that have outlived their usefulness. So the only way we're going to solve this is it's just like financial planning. You got to have a plan, and without a plan, you're not going to have success. And so the two sides have got to sit down and come up with a plan that's probably not going to be good for anyone, or not, and no one is going to feel perfectly comfortable with. And that's probably the essence of a good compromise, is simply finding that common ground again, rather than being caught on the extremes, as both parties seem to be at the moment. So cut expenses for unnecessary or programs that have outlived their usefulness, and raise some additional money on an equal kind of basis.
Well, we just got a text from a viewer that wants to know, and we do not try to, this is not a commercialized show. We're trying to educate you and let you make the decisions by bringing on the top people in their field, which is why we are lucky enough to have Ray. They want to know if you give second opinions over someone's portfolio.
So, Steve, the short answer is yes.
Okay.
First of all, we are not in the business of trying to disrupt good relationships that people have established over a long period of time. And whether it's financial advice, legal advice, or medical advice, sometimes you just feel better if you get a second opinion.
Yes.
And we are willing to do that and to have that conversation. Our sense is people don't make changes, Steve, unless they're unhappy with whatever they currently have. For instance, we don't go out and buy a new car unless we're unhappy with the current one. We don't go buy a new home if the house is not satisfactory anymore to whatever our lifestyle is, whether we have a growing family or are looking to downsize. The same thing is true in changing professional relationships. People are not going to change unless they're unhappy where they are. And if they are, we're more than willing and able to offer a 1-hour complimentary consultation for people to come in and visit with us to learn more about us. And if all that is seeking out that second opinion that you ask about from that text message, that's perfectly fine with us. We're here to help in any way that we can. And that's one of the reasons why we want complimentary.
Ray, I think what it is also is there's very few things that you can do. Like you have a show on Ask the Experts, and people can hear your thoughts and your personality, and they don't always get something like that. And I think what it is people can feel comfortable with the way you conduct business, your feelings on wealth management, and I think we're going to probably are getting a lot of people who feel comfortable with you, and maybe they've had somebody for a long time, and maybe there's a trust factor, which is so important in your business.
Well, absolutely. It takes years to build that kind of trust, and it only takes a day to lose it by making that one mistake, whatever it might be. And that's not to say that we get everything right every time. But when it comes to trust, as I've often said, there's no wrong time to do the right thing, and that's what we try to do each and every day with all of our clients, is to do the right thing. And it's a very bright, clear line in our firm to try to do the right thing every day.
Is it time to buy all those FANG stocks, which have been beaten up so badly over the past year, Ray? They have done great so far this year. Is this the time to get into those?
Steve, those FANG stocks, Facebook, Amazon, Netflix, and Google, amongst many other tech stocks, were the ones that were down dramatically last year. And this year, they're up equally as dramatically. Maybe not back to where they were, but if you look at something like a Facebook, it's up over 100% over the last several months, after having been beaten down dramatically, even being as low as at $1.85 or $90 a share. The key to successful investing is to have a well-diversified portfolio with a long-term focus, not thinking about how I'm going to get rich quick. The way you get rich quickly is one day at a time, $1 at a time, being patient, have a well-diversified portfolio, and not trying to second guess the market, but let it continue to do its wonders as it's done for a long time. And every tough time that I've been through in the over 50 some years that I've been involved in the financial business, we come out the other end better, we come out stronger, and we continue to move in an upward direction. And I don't think there's any reason that won't happen now. So that's the secret to success. It's the millionaire next door approach. You never know the people who have money, because they just do all the right things and they're quiet about it.
Ray, I got to tell you, I love asking our experts this question, and I always feel so comfortable asking you, why should I do business with you? Why should I secure your company to handle my money?
Steve, I guess I could be very egotistical and say a lot of things, but here's what I would tell people. The first thing is that if you're going to be hiring someone to help you with your money, whether it's us or someone else, the first thing is that you want to work with somebody who is a fiduciary. They must, by law, always put your interest ahead of their own. Everybody thinks that every advisor does that, but that's simply not the case. So you want to ask the person, are you a fiduciary? Having been a certified financial planner since 1990, and having the fortune of being the chair of the CFP board in 2014, I have a strong preference to people who have a CFP designation, and that's who I think people should be working with. They have the education, they have the experience, they have the ethics to help people. I would encourage you to visit with 2 or 3 people to see who has good table manners. Like we want a doctor who has good bedside manner, we want a financial planner who has a good tableside manner. Somebody you can be comfortable with, not somebody who says, "No, don't worry about it, Steve. I'll take care of all of it. You just don't know enough, so I'm going to take care of you." That's not the kind of person that you want to do business with. So when people come to us, if they find us being a fiduciary, that we are certified financial planners, and that we have a good tableside manner, that's a good indicator as to who you may want to be working with. And if people select us, great. But if they don't, there are lots of other good, qualified financial planners in the Tampa Bay area that are similar to us. Most importantly, are those 3 items, however.
You know what? I look at little things, Ray, and the one thing I look at, you don't just have clients in Tampa or St. Pete, you have clients all over the United States, which means people love how you do business. They love how you've handled their business, and they are recommending you to friends and family members.
Well, there's no question that we are fortunate to have a great client base who are generally happy with us. There are always those, I hate to say it, Steve, but there are always those that for whatever reason decide they want to move on, and that's okay. Hate to see it happen.
And you can never please them anyway, Ray, so it's okay.
Well, there is that old expression, you can please some of the people some of the time, but you can't please all of the people all of the time.
Exactly.
We are blessed and get many referrals into us from our existing clients and our professional network of CPAs, attorneys, people who work with others in the retirement market but don't do what we do. So we are blessed in that way, and we're eternally grateful when people do that.
Okay, well, we're getting blasted by listeners and viewers. What is your phone number, Ray? How can people reach you?
The easiest way to reach us is our 800 number, which is 800-633-3049. It's 800-633-3049. And just call our offices. And if you want to sign up for our twice a month newsletter, you can do that. If you want to take advantage of a complimentary consultation, you can do that. And if you want, before you even call us, if you want to just go to our website, provise.com, provise.com, that works really well also.
Ray, it's always a pleasure to have you on the show. Ray will be back with us again next month. We actually do 2 shows a month with Ray, and we will be talking about those dates that are coming up. Ray, I can't thank you enough. You're the best, and we will see you again next month.
Steve, be safe, be well.
Thank you. That's Ray for our Provise Wealth Management. And Ray will be back with us again next month. We'll be back with you next week with more Ask the Experts. Everybody have a safe week. Stay dry. We'll see you soon.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.